Well, global equity markets have risen over the past 24 hours, snapping a three-day losing streak, particularly out of the US. And the major reason for the increase was the fact that we've seen lifts in most commodity items, and this has lifted some of the big energy companies, particularly out of the US market. So what does this mean for the New Zealand dollar? Well, while over the past 48 hours we have lifted over 80 cents against the US at one point, we've since drifted back slightly lower against this level. The positivity around the increase in the Fonterra payout that came through on Tuesday, as well as the ongoing positivity from the credit ratings in relation to the New Zealand budget, has meant that the Kiwi dollar strengthened a little bit over the past week, but we're still not breaking through the 80 cent mark, trading the late 79 cent range against the US on Thursday morning. While the New Zealand dollar has lifted marginally over the past week, we've seen virtually no change in the wholesale interest rate markets. In fact, over the past few weeks, we've seen very little movement, and this has been the result that we haven't seen any change in expectations from the Reserve Bank of New Zealand, as well as any major change in the economic outlook for the New Zealand economy. So what are we picking for interest rates down the track? Well, in my opinion, short-term rates, those being around 90 days or even out to 6 months, are going to stay low right through this year. I wouldn't be surprised to see them start to pick up around December or even January in the early part of 2012, with expectations that the OCR will start rising around March of 2012. But if you're looking to lock in some low, long-term rates, sort of 3, 4, 5-year terms to de-risk your business, then these are likely to start lifting a little bit earlier than predicted, and they could start lifting over the next few months, so be ready to lock them in when you think you're ready. The wool market has been very buoyant over the past 12 months, and this is a reflection of some of the other competing fibres that we are seeing in the international market. Cotton prices, for instance, traded out of the US, have lifted significantly over the past year, although they have fallen over the past few months, falling by around 25 to 30%. And I do think this will have an effect on the local wool market here in New Zealand. So what am I picking for wool prices? Well, I do think that we will see prices lift, and they have lifted from the low levels we've been seeing over the past couple of years. This is a reflection that supplies are low and are going to stay low for the time being. However, I'm not expecting to see prices stay very high that they have been over the past couple of months, and I wouldn't be surprised to see them fall around 10% from current levels down the track.